Hello traders, my name is Gregor Horat and welcome to a new free video in which I will actually update you on my views regarding stock markets, particularly the S&P 500, which, as you know, has came nicely lower from its highs since start of the week, which has also made an impact on yen crosses. Particularly, as you know, I was looking last week and also recorded the video, I think it was on Friday, on New Zealand dollar against the Japanese yen, and I expected a resumption to the downside based on correlations, and as you know, Japanese yen will typically get stronger if stocks will come under pressure. So actually this has occurred. If we just go very quickly through this video, this in black, if you recall, was actually represents the S&P 500. It was trading at the highs. Yen crosses were much lower here, especially the lowest one, which is in blue, was a New Zealand dollar against the yen. So actually I expected this pair, this cross pair, to continue lower, while I was thinking that stocks are trading near the highs. So actually we will take a look on the updated charts today. The S&P 500, here if we take a look on what we were looking for, actually this was posted, daily chart, this was posted on Sunday. Actually we marked and highlighted that there is a three-wave rise to a new high and that the recovery is not that strong, so we expected a reversal to the downside back to fill the gap. Also there is an idea that this is a flat in wave 4 with an larger uptrend. Also I highlighted that this wave 2 was quite big, long in time, so definitely calling end of a wave 4 here at these March lows, I think it would be too early. That's why I like the idea of a flat or maybe even triangle. So now if we take a look on the updated chart, we will go to the S&P 500 first. Actually on a weekly chart, still we are in fifth wave, looking for more upside, expecting a test of this upper channel resistance line, maybe even throw over formation and then a reversal to the downside, and this could occur by the end of the year. But for now we need to stay focused on a 4-hour on a daily chart, where we can see that market came nicely to the downside from the levels I highlighted. We filled the gap, as you can see. Normally when gaps will be filled, you will typically see that those gaps will cause a new reversal. So I'm not surprised to see a bounce, I think it was yesterday, which on the intraday charts appears to be a corrective movement, corrective rally, which can either stop at this previous swings which were broken. So if a support is broken, it can become a resistance right here at 2380. So I will be looking for more weakness here for a wave 4, which can actually be a triangle or a flat. A flat is my primary view, which means that this wave C can unfold in impulsive fashion. As you know, when stock markets come under pressure, usually there's a very strong and aggressive sell-offs because of fear. Okay, so that's why stock markets really like expanded flat corrections. Okay, also the second important thing is that those levels at 2320, I'm sure that there are a lot of important orders around there. Also traders, investors may focus for and expect more weakness when this level is reached, so I would really not be surprised if we see a spike into this region and then turn to the upside when everyone would be kept on the wrong side. Something similar has happened here around 2400. So that's an idea for a flat correction, but as you know, if you're familiar with the Ellliott wave theory, so market moved higher here. Okay, there's also another pattern that is valid, and if you see a 3 waves down, 3 waves up, then this structure can represent part of a running triangle or part of a flat correction. And when market turns to the downside, you don't know actually in which correction we are trading, which pattern. So for now we need to wait more time, but what really matters is that even if you think that we are in a triangle, which means the downside will be more limited, you still need 3 waves of decline, this part as wave C. Then you will see a 3-wave rise, and then you will see wave E, then move to the upside. Okay. The second thing is that also market can continue lower into a 5-wave fall like this for a wave C. Okay, so 1, 2, 3, 4, and wave 5. So you would expect more downside and then turn to the upside. So at this stage where the market is trading right now, I think that there's more weakness coming, either for 5-wave fall into wave C or 3-wave fall into wave C as part of a triangle. So which means that yen could get even stronger. So watch out for these resistance levels. Firstly, mentioned earlier at 2380 for the S&P, and then potential turn to the downside. This is invalidation level, the short term. So as long as these prices holds, I think that we can see more sell-off. I think that today's, which is Friday, weekly close price should be also very important for stocks to see where we may go next week. So if this will prove correct, then New Zealand dollar against the Japanese yen should also stay under pressure. So here's actually the 4-hour chart that I was looking for last week. Waves 1, 2, extended wave 3, and more importantly, we have seen a nice and deep bounce here. But look at the substructures. It was clearly not an impulsive price action, so I assumed it's a correction. We passed the first resistance here and stopped at the second resistance at 79.60, and then we turned to the downside. However, I don't want to be too quick on a market turns. Okay, so before this pair caught my eye, I definitely waited on a reaction from resistance that I was tracking. So actually this sell-off, okay, which occurred on May 10, this sell-off was actually my confirmation that this wave 4 was actually the case and that we are going lower. So I was looking for short-term charts at the start of this week, and I was identifying this as a flat correction for a wave 2, and as you can see, since then market turned nicely to the downside, and it looks like that we will still continue lower because the S&P is the one that is still looking bearish, okay, because as we said, we need minimum 3 waves down. So I'm expecting more weakness here on New Zealand dollar against the yen, and also this is going in line with other yen crosses. We have seen some reversal to the downside. However, do not call any significant top on those pairs. I just think that we may see a deeper pullbacks in minimum 3 waves. So it can be just a corrective pullback. But when it comes to trading, it's really important to focus on pair which is looking a lot more weaker than any other pair. Okay, so for example, New Zealand against the yen, it's trading much lower compared to, let's say, euro yen, pound yen, which are much higher. So definitely this one is the one that I'm tracking, and I'm still focusing on this one, since I think that we could take these lows out from April, and then maybe watch out for a turning point when stocks could bottom, because also here on New Zealand dollar against the yen, we would then have 5 waves of decline. Okay, traders, thank you very much for your attention. Also watch out for updates at the start of next week. I'm preparing a new video in which I will actually cover have some great views, I think, on euro dollar, and also crude oil is looking very interesting. Actually, I can give you some updates on this crude oil in a second. So what is really interesting here in crude oil, that I was looking for turn to the upside back into this resistance area of previous wave 4, and what really matters is that even when I was looking for a 3-wave rally, this 3-wave rally became a 5-wave rally. Okay, so clearly you can see a new changing trend here happening. I don't know if this is maybe start of just a 3-wave bounce back to the upper channel resistance line, or maybe it's a start of a new strong uptrend. So I will give you more details on this one next week. I think that I have found some very interesting correlations with some other markets that is pointing to the upside as well. So keep an eye on crude oil for this wave to be pullback next week, when I will also make a new update and give you more details on this market. Okay, so thank you very much for your attention, traders. Now, if you like these videos, if you like our analysis, please check our website. We have made a new offer. We bring back a new offer 2 months for the price of 1, so we have 50% discount. So if you're interested, just check our services, and if you have any questions, don't hesitate to contact me. Okay, thank you very much. Bye.